Hello. I just wanted to explain one thing why most smart money traders fail, at least at first. And the problem with smart money is that whenever we have a break like this, okay, whenever we have a break like this, people think that automatically we can long from here or here, whatever. But the problem with that is this pattern will only work in certain situations, because you have to understand that we are bearish right now, right? In this leg, down, up, down, up, down, up, down. And to break this, it doesn't automatically say that we are gonna create a failure swing and go up. That can happen. That can happen if we have some zone on the left, or if we took out some inducement on the left. Then that can happen. But most of the time, what we're gonna have is we're gonna create this pattern, and we are gonna have a leg down, like further down. So, and this OB will just serve as a trap. And even if it gives a certain reaction, it might still go down, okay? And the thing that differentiates me and some other inducement traders from all the smart money people that just blindly long whenever there's a break is that I don't really consider this as a break. I consider it as inducement, as liquidity, okay? So I don't look at breaks. I don't use BOS, okay? I look at this as money. This is money. Okay. So the price will only move when we take out money. And there is money. Why? Because there are stop losses. Okay, here are stop losses. People that think the price will come up to this OB and continue selling, they put their entry here and their stop loss somewhere in here. Okay? They would do this. This would be their trade continuing, right? But it took them out. It took the early sellers out. And now the market can move down, because the real smart money, the banks, they want your money. They want your stop loss. And when they have collected your stop losses, we can reverse down. Okay? So this is a very high probability trade to take it down. Even if we get a reaction higher, this is a nice hedge trade. If you wanted to take a long from here, you can take a short first from here, keep it open, and then if you believe that we are ready to go up, okay, make the long, but keep this one open, because if this one fails, at least this one will go and continue. That's how you hedge. And the thing now is, how could you have entered here? Well, as I always say, if you don't see an entry here, you can go to the line chart. And here, as you can see, is a very simple entry. We took out this double top, and we had a break here. Yeah, and when I say a break, this is where I use breaks, okay? This is fine, using a break like this, but not in here. And I will explain to you why. This is my intent. So you can take it from here, or you can take it from here. Actually, let's do it from here, because this is gonna be my entry. So we took out the stops here. Again, people that think that this double top will hold, we took them out and we reverse. So this is actually your entry. From here to here is your entry, because we took stops and we broke down. And you can take either this one or this one as a break. It doesn't matter. It broke both of them. And you can target the low or the last liquidity here. Liquidity is just a low. This, it's all liquidity. This is liquidity. All these points are liquidity, because below them are stop losses. So the super safe one, if you just want to take, you can take from here, because there can be a failure swing here and it can go up. Yes. Otherwise, you just keep it open and take the target from here. So yes, and as you can see, the price broke down, came in here. It took this little as liquidity as well, and it broke down, and it actually gave you another entry here. Guess what happened? Again, went down, up, down, up, down. Then this one took this high. We broke this high, and we went down, and then we took this high as liquidity and mitigated this wick that took this liquidity, and then we can go down. Okay, this was a perfect mitigation, as you can see. We took these stops, and then we created another one. We took the stops again from here. So actually you can enter here, you can enter also in here, because this one also took stops. So this can also be your entry again. Okay. So this candle that took, this is also your entry, because it took stop, mitigated this, and it broke this low. So you can have multiple entries like this. You just follow, you enter on the candle that took stops and broke down, as well as here took stops, broke down. We entered on this candle, took stops, broke down, we enter. So yeah, on the line chart, this was the only entry I could see, but if we follow the mitigations on the wicks, there are multiple entries, multiple entries you can take. But of course, all you need is one. And as you can see, we took the low, just as I said. The low was taken. So yeah, this actually happened at a perfect moment. So, as I said, smart money like this doesn't work. It just doesn't. Whenever you have this and you see a break, don't take a long from here. No. Change the game. Change your perspective. Change your perspective. Forget about this. Forget about this. Forget about it. Just learn to take this. Okay? You take out this money. You take out the money. Ideally, you should wait for a break on the same time frame or on a smaller time frame. Usually, I stay on the 1 minute and I also get the entries on 1 minute. I don't actually change time frames. So, you get this and you just enter here on the breaker and you take it low. Here. Okay? This, it's gonna, usually on the Euro USD, it's gonna usually take the breaker, but take the whole as a stop loss, take it all. Okay, and target this, okay, this thing. I just showed you live how it happened, okay? I just called it live. So, the easiest one, as I said, go to the line chart. The line chart doesn't lie. The line chart will tell you exactly where the break happens. Okay, the break was here. We took stops, up, 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 took stops, breakdown, entry, target the low. That's it. 2.5 RR. I know it's not a lot, but some people take 1 to 1 RR and they're happy. So 2.5, good trade. It's a good trade. It's a good trade. If you risk 1%, that's 2.5% on your account. Awesome. Okay, so I'm gonna end this. I hope this is clear, because this is super important. Just, you have to change your view. Change your view. Whenever you see this break, think short. Short, 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 short. Just forget about this. Forget about this. You break, you short. You break, you short. You break, you short. Okay? This is gonna happen 85% of the time, okay? So, I hope this is clear. I'm even gonna make a shortcut. This shortcut, but screenshot for you all. You should too. Just take a screenshot of this and use it whenever you are trading next. If you want this screenshot, I can send it to you on Telegram as well, if you write me. Okay, so that's it. Bye.